What is up, everybody? Good morning. Welcome all of you who are coming over from pre-market prep. I'm watching the redirect slowly work its way through the YouTube pipes. So enjoyed Mitch's segment just there. We have a lot more coming today. Mitch will be back. We're not doing live trading today, but Mitch will be back in about an hour, a little more than an hour from now. Him and I will talk some stocks for a few minutes. But if you don't know what's going on right now, this is our All Access show. This is a show that we did intermittently in the last few months of last year. But this year we're doing it every single Friday, at least every Friday that the market is open. And it's going to go after pre-market prep. We're going from like 9:15 to 11:30, 11:40-ish, right into Benzinga Live. Yes, exactly, Alex. I'm in a different location, physically, mentally, emotionally, behaviorally. No, I'm all the same there, but I am in a different studio right here. Here is what's going on All Access. Here's the purpose of this show. We spend all day, every day, talking about the stock market, right? Well, crypto too, but you know, the charts, stocks, what's up, what's down, why, news, and we reduce these companies to their charts or to their earnings, right? But every company has a story, right? Every company has people behind it that are working their butts off to grow it. So what we thought we would do is we would take a portion of the week every single week, take a pause, at least on air, from the grind of charts and news flow, and just talk to some C-suite executives about them and get their stories, right, about them, about their company, and just do a little bit of a 30,000-foot view, if you will, on these companies. So in the chat, I see Money Mitch in the chat. What's up, man? In the chat, you are free, obviously, to keep the discussion going about the markets. We're going to open here in about 11 minutes from now. So keep it going on whatever you're trading for the day. Tell us in the chat. But what I'm going to be doing for the next couple hours right here is talking to these companies. We've got a number of companies, and I'll actually show you who is on the schedule for today. Let's go with this guy. Oh no, you can't. You probably can't see that because I'm full screen. So I'll bring the agenda up. It's in the description right now. But we've got a half dozen or so companies ready to roll today. We're going to have their founders, their CEOs, their CTOs, executives from the C-suite on to hang out with me for 20 or so minutes. We're not going to talk about the stock. We're not going to talk about the number. Well, we can talk about numbers, but we're not going to get into the weeds on the numbers. We want to talk about the story because that's frankly what's more interesting here, right? As I said before, every company has a story. So today we're talking to companies in retail. We're talking to biotech. We're talking to crypto miners, right? We're talking about talking to food companies. We're talking to supply chain food companies. So I've got today 7 interviews lined up, ready to roll, and we're just going to do it. So before I go any further, a couple of housekeeping items to address. Housekeeping item number 1, all of the companies that are here today have paid Benzinga to be here. Okay, just so that is upfront. We are transparent about that. This is an interview that they're paying for. But what they don't know is what I'm going to ask them. And even better than that, they don't know what you are going to ask them. Yes, you in the chat, everyone. I see you, David, JD, Dylan. Ask away, right? This is as much for us as it is for you. Ask your questions that you have, and I will ask it. I will save time at the end of every single segment to ask questions from the chat. So let's keep the questions going at all times. But we are transparent about the fact that this show is one of the ways that we monetize our channel. So that's housekeeping item number 1. Housekeeping item number 2 is that this show is sponsored by a company called Ticker. If you don't know what ticker is, allow me to show you what ticker is.
What is ticker? That's right, ticker with 2 I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
So I'm going to put the link in the chat right now and on screen. It's ticker with 2 I's.com/Benzinga. You go to that link and a few things will happen. It'll take you to a sign up page. Okay. You sign up, you create an account. If you create an account and link it to your brokerage, after 30 days, they will send you a $20 Amazon gift card. I kid you not, they will do it. Okay. So if you didn't get that commercial ticker, they're connecting consumers to investors. They'll give you rewards for owning, for example, Starbucks. Just example. Let's say you're a shareholder in Starbucks. You own some stock. You're eligible for some rewards, free coffee, free whatever, right? That's the idea behind ticker. Some of the companies that are on today's show may even be on the platform. So ticker.com/Benzinga, ticker with 2 I's. And again, create your account, link it to your broker. And then after a month, they will say, you have to also check. There's a box on there that says Benzinga All Access listener. Check that box. I'm going to pin the link to the top of the chat. If you for some reason miss it. So there it is. What's up, everyone? How we doing? Catching up on the chat, making sure I'm not missing too much. I don't think I am. Okay, without further ado, let's roll our intro and start this show. Okay, I hope you guys enjoyed that. We're always looking to make some changes here. So our first company scheduled for the day is a company called My Size, founder and CEO Ronan Luzon. Unfortunately, Ronan is not here right now. Our next company is here. Adi, I see you in the background. So what we can do, I'm going to see if I can maybe call an audible here as I keep one eye on the chat. Let's try this. Let's see. Hold on. I'm reading. Give me 1 second. Okay, we have Adi Zuloff-Shani in the background here, and she is with the company that is next up on our agenda. Wait, Easy Mike, what? I crushed Tim Seymour? How'd I crush Tim Seymour? What do you mean, Easy Mike? I was perfectly nice to Tim Seymour. What did I do? I didn't do anything. I don't think I did. Now you're making me self-conscious. I don't feel like I did anything. Okay. So here's what we're gonna do. Adi, tell me if you are ready on your end. Give me a thumbs up. You're ready. Okay. Then here's what we're going to do. We're going to bring you on a little early. How about that? Because our first guest is not around. So we're going to keep it rolling here. And without further ado, let me bring on the real first guest, Adi Zuloff-Shani, the CTO of a company called Scisparc. And Adi, I'm going to bring you on right now. So speak now, forever hold your peace. Adi, are you with me?
Yeah, hi Spencer.
How we doing?
Do I get credit for being on time?
Yeah, you're on time. You're on time. So I appreciate that. I appreciate that. So okay, let's start with this. Tell us a little bit about your background, sort of how you came to be the CTO here, and also what you do.
Sure. Just want to say that I'm having a little bit problem hearing you, so if you can just do something about it. But I did
Okay.
hear the first question. So in my background, I have a PhD in immunology, and I have more than 20 years experience in the industry, going back and forth from the bench to companies, actually doing hands-on work, but also responsible for R&D activities in many companies. I've joined Scisparc 6 years ago, and I'm happy to say that I'm in charge in the company of all R&D activities, but also everything that has to do with regulatory and intellectual property. This is always, in startups, you were handling a lot of activities. I'm also very proud to say that until today, I brought 2 products to the market, took them all the way from the bench to the market. So, and I'm
Nice.
very happy to be here today.
So what exactly does Scisparc do? What is the core technology here? And I have some charts, some pictures I want to share. But
great. So please present them. So what we do, we are a pharmaceutical company, and we are developing cannabinoid-based therapies, which means that we take the active components from, can be either from cannabis or synthetics, and we take them through the pharmaceutical pathway, meaning FDA pathway, in order to bring to the market approved drugs. The slide that you are showing is actually speaking about the scientific rationale behind our technologies, which is the sparing effect. It's actually something that Professor Meshulam spoke about already in 1998 when he spoke about the endocannabinoid system that we have in our body. He spoke about synergistic effect between compounds, and we took it a further step. What we do, we combine two components. We have 3 platforms in our company, and all of them contains 2 components. One of them is a cannabinoid, and it can be the THC, CBD, various of cannabinoids, and then we assemble it with endocannabinoid, which calls palmitoyl-ethanolamide, or in short PEA. And when we combine these 2 components, we see a synergistic effect, which actually allows us to decrease the effective dose of the treatment that we are developing.
all right, for those watching, it is 9:30 a.m. Eastern time. The market is open, so just everyone is aware of that. Okay, so you mentioned your platform, right? The programs you have. Can you go through that a little bit?
Yeah, sure. So we have currently 3 platforms in the company, and each platform we develop several indications. One of the platform, which is called Psi-110, which is a combination of THC and PEA. We develop it for 3 indications: Tourette syndrome, obstructive sleep apnea, and Alzheimer's disease and agitation. We also have a platform that we call Psi-210, which is a combination of CBD and PEA, and we develop it for autism spectrum disorder and status epilepticus. And we also have Psi-160, which is a CB2 receptor agonist that we develop for pain. And this is the platforms that we currently have in the company. The advantage of having a platform rather than to just develop one treatment or one candidate for each treatment is that we can accelerate the clinical development path, because all the information that we gather on each platform, mainly safety, because that's a huge question that FDA asks you, and he wants you to show a lot of safety data, we can take from platform to platform and to use it, and by that not only accelerate the development and hopefully getting to the market, but also doing it and spend less money on each and every indication we are developing.
Can you maybe explain the difference then between like what is a platform?
Yeah, so platform means that you have like an overarching system that you develop. So we have this a combination of, for instance, we have a combination of THC and PA, as I mentioned. THC has a lot of at least indication that it can be effective for. Not just, for instance, I said we have Tourette, we have Alzheimer, we have obstructive sleep apnea, and this is because there's information showing that THC can be very effective for those indications. So instead of just building a component for one indication, by having several indications under each platform, we can, as I said, we can transfer information that we gather from each indication. Let's say in Tourette syndrome, this is the most advanced technologies we have in the company. We are now, we'll start soon a phase 2B study. All the efficacy information that we gathered on the THC and PA and safety information mostly we can take for Alzheimer's disease indication and to use it also for obstructive sleep apnea. So when you have a platform serving several indications, you can, as I said, accelerate your development pathway and also spend less money on each indication because you have already safety information from the other platform. Hopefully, it's the explanation was good. Did I explain myself good? Okay,
yeah. Great. So wait, what about the timelines here as we look ahead to where how close you are into getting your drugs and platforms through the pipeline?
Right. So as I said, Tourette syndrome is the most advanced indication that we have in the company. We will initiate our phase 2B study in the first half of 2022. It's going to be a continuous study of a study that we have completed that was conducted in Yale University in the US under an IND. And now we're switching to a multinational study that will have sites in Germany and in Israel. Sorry. As I said, we expect to initiate the study in the first half of 2022. This is a phase 2B study. It's going to be a double-blind placebo-controlled study. And Alzheimer's disease and agitation is a study. It's a phase 2A study. We just this week, I think it was, we announced that we have enrolled a first patient to the study. And this is for the Psi 110. For obstructive sleep apnea, we have completed successfully a phase 2A study, and we are now waiting for a strategic partner to continue this program with. And then we have the Psi 210 platform that I've mentioned, which is for autism. This is a study that will be conducted in Israel. The path, actually, that's the only program that we have a path for medical cannabis. That's why it's similar, if you will, for a phase 3. And this is a study that will also be initiated in the first half of 2022. And under this platform, we have also status epilepticus, which we are in a preclinical stage. Study is up and running. We will have results for the study coming throughout the year. And also we have the third platform is Psi 160 for pain, a CB2 receptor agonist, and we are in we completed the preclinical stage, and we are now preparing towards the phase 1 study.
Can you maybe if we can back up for a second, and I want to actually go back to
Sure.
to the previous slide if I can. If you can talk to us about there we go. Nope, that one. Talk about the technology here, like the technology behind your drugs and like how it actually works.
Yeah, sure. So everyone who knows cannabinoids field, also medical cannabis and cannabis knows that there's a lot of literature showing a lot of promising effect for the various cannabinoids in the plant, or either not in the plant, which are completely synthetics. You can find literature suggesting effect in every indication that you can think about, really just about everything. The information sometimes it's good information, sometimes less, but there's no indication that you can start with that you don't have at least some initial information showing the efficacy of a cannabinoid in a specific field. The problem with cannabinoids is that there is a tolerability of our body to the treatment. So you need to increase the effective dose as a patient continue to consume a certain drug. Also for THC, for example, this is a problem even before you start raising the effective dose, because everyone knows that THC is a psychoactive component. So although there's a lot of promise in the treatment of cannabinoids, medical cannabis for that matter, the issue always remains the dose, the effective dose, and the adverse events associated with the consumption of the cannabinoid. Even a very what considered to be a very moderate, harmful cannabinoid like CBD, if we take, for example, GW's product, the effective dose is quite high, and there is a need, like every other drug, you need to increase gradually the effective dose as I said, the patient consumes the drug. We found that when we combine the cannabinoid with the PEA, with the endocannabinoid, we can significantly lower the effective dose and therefore have an effective treatment with a lower dosage, which means that we can offer the patient an effective treatment, but much, much safer. Also, what we saw from the Yale study that I've mentioned, we had patients on medications for 9 months. We didn't see any tolerability for the medication. We didn't need to increase the dose throughout the 9 months of the study. So we believe that not only that we can offer a safer treatment, we also hope that it can be something that there's no tolerance to the treatment. Hence, you don't need to increase the dose. And maintaining a safe dose is something that is crucial, because what happens that even if you have a successful treatment with cannabinoids, but you need to increase the dose of the cannabinoids, what you get is adverse events, and then patients are reluctant to use the treatment, and there's like a vicious cycle that you cannot take the treatment because of the side effects associated with the treatments. We offer, by combining the cannabinoid, THC, CBD, whatever, with the PEA, we can offer a much safer treatment, which is obviously it's something that patients will be happy to use because it's safer treatment. Obviously, physicians are happy to use, and also regulators, because regulators, all three actually, patients, regulators, and physicians want to use the smallest dose, the lowest effective dose that they can, and this is exactly what we offer in our platforms.
And if I can bring that up for a second here, I mean, you mentioned this earlier, and I want to get back to what you just said in a second, but you mentioned earlier just, CBD, cannabis can be used to treat a lot of things. So frankly, how did you decide upon Tourette's, autism, epilepsy, and sleep apnea, Alzheimer's, like these programs?
Very good question. What we're doing is we're looking at fields that there's really a huge unmet need. Tourette is a field like that. Alzheimer, obviously, also obstructive sleep apnea. Until today, you don't have any pharmaceutical treatment for obstructive sleep apnea. You just have those medical devices. So this is how we decide which indication to pursue initially, and this is how it's being done. And also, I just want to mention one more part of information, which is very important. Not only that, by combining the cannabinoid with endocannabinoid, we can offer a safer treatment. We also, this is a way where we can be granted by patents, and we actually owns 5 granted patents in the US, and this is in an area that getting patents is very, very difficult, because you cannot patent something that it's naturally occurred, like cannabis plant or phytocannabinoids. You cannot, most of the indications, as I said, because there's so much information about medical cannabis and cannabinoids for treatment of several indications, you cannot get patents for indications because there's a prior art. And we found, as I said, not only how to bring treatment that is potentially safer, but also to get patents, which is very, very unique in this field.
There's a couple questions, Adi, in the chat. I'll throw them to you. JD is asking, couldn't CBD also cause a positive drug screen at work? I guess that would depend on whether your work screens for such things. This is maybe more of a regulatory question, but is that something that like you think about or not really?
The regulatory pathway is very important for us. As I said, the path that we chose is an FDA path, and this is a highly regulated pathway. But actually, I'm not sure what he's asking and how I can relate to it. So
I guess it was more of a question, I suppose, for employers. But to Adi's point, like they're following like the FDA the FDA's own guidelines here. So any drug that it gets through that pipeline, is approved for use in the United States. This is a tough one. It's from JR.
That's right.
What is a good like analogy or a comparison that explains how this therapeutic, how the drug works in patients? That's a tough one, JR. I'll leave it up there.
So actually, when we develop or when we think about the clinical trial, now we're going to measure the outcomes of the treatments. We just use the standard of the gold standards of each indication. For instance, in Tourette, you have scales that are considered to be a gold standard when you measure the efficacy of treatment on Tourette patients. Same for obstructive sleep apnea. So each and every indication, there's the gold standards for measurement, and something that I should have mentioned that when we decide on a specific indication, we also approach the KOLs, the key opinion leaders in each field. For instance, as I mentioned, the Tourette study took place in Yale University, which is huge for a tiny company from Israel to get such an embracement from a university that considered one of the tops in the US. So we really connect to key opinion leaders in each field that we are developing drug for, and we just work on the clinical protocol with them in order to bring the most relevant and important scales when we measure the efficacy of the drug that we develop. Yeah. True. So, when I said drugs, obviously I mean treatments.
Right. So Adi, like what is the next catalyst here for, as we're watching, throughout 2022? Is it as I bring the slide back on the screen, is it further development in the trials here as you get those trials going? Is it finding that strategic partner? What comes next?
So it's all. In 2022, we will have 3 up and running studies, clinical studies. we will continue looking for a partner, a strategic partner, and obviously as much as information as we will be able to share with the public and potential collaborators, the more interest we will create around the company. So yes, everything that you have mentioned is in our goals for 2022. It's a very exciting year for us. I don't think there's a lot of company who runs in parallel, not in our size, in parallel 3 clinical studies. So I think that we are very unique in that. And again, I want to mention, as I mentioned before, we are very unique also in our IP portfolio. And this is something also that can be very, very attractive to partners that will, even big pharma companies who are very disturbed by patents.
Since you mentioned IP, I've spoken to other cannabis executives, and everyone seems to agree that IP is just like one of the most important things. If you have strong IP, at the very least, you can sell it, or it's worth something, right? So like, at the very least. So like, what why is that so important to you?
It's so important because when you develop something, you spend so much time and money. So you want to really, you have to, and we as a public company, we have investors who trust us, believes in us, and invest in the company, and we want to bring them, revenues for their investment, and we will not be able to do so if we will not have intellectual property protection. And this is because if we bring something that is successful to the market, every other company, if we will not have a strong IP to protect us or strong patents to protect us, it means that everyone can actually, get advantage on the good results that we obtain and just develop the same drug. By having patents that protects us, no one can do it. So this is why intellectual property is so important in every company, but especially in public companies.
All right. Dr. Adi Zuloff-Shani, Scisparc, CEO. Adi, thank you so much for coming on. I know we're in a very different time zone, so it's later for you than it is for me, but thank you very much, and good luck this year. We'll have to keep tabs on how those trials go.
Well, thank you very much. I've enjoyed your interview very much, and hopefully we'll meet again.
Yep. Have a good one. All right. It is 9:49. Let's do this. We're going to have our next guest on in a couple of minutes here. But before we do that, let me bring up, let's go to the pro. Let's see how I see the chat. We're talking a little bit about the market, right? I'm trying to keep one eye on things. So let's go to the pro, see how we're doing. We're 20 minutes into today's session. My question that I don't know the answer to is, have we bounced at all? Let's check it out right now. Let's go bring up this is the SPY. I want an intraday chart of the SPY, and that's not going. Let's try the Qs. Computer Studio is bugging out for me. There we go. There we go. Okay, so yes, the answer is we have bounced a little bit. I think sentiment's still probably broadly down for the day. Again, I'll have Mitch on in like an hour or so to talk about whatever trades he's made today. I don't know what I know he's in the chat. Tell me what you're watching. Matty Ice is watching Walmart. I want to see some tickers though. Wow, Walmart. What's up with Walmart? I know retail sales came in a little bit lighter than estimates today. Whoa. See, was there news? Let's go to the news tab here. Do we have news on Walmart? No. It looks more dramatic on a 15-minute chart. Let's just zoom out on a daily. Yeah. Look, I'll be honest. My idea here for the year is that we're gonna end up being just back and forth zigzag for the whole year. That's kind of that's kind of my take just for the whole year. So every stock kind of applies is sort of where my head. Every index kind of applies. The SPY, the Qs, the Russell. Even the banks. I mean, we have J.P. Morgan, which was down this morning off its earnings report. Right, that looks pretty bad on the 15-minute chart. But the banks have been strong, and I'm sort of just thinking. I'm thinking maybe this dip gets bought a little bit, and we just kind of stay range bound. That's sort of where my head is at. It's sort of a boring take, but it's kind of where I'm at right now. You sort of have to just trade the range. If you're going to trade, you're buying on after dips, you're selling after rips. I think we all just need to reframe our expectations for the year. Frankly, not every year can be amazing like it was last year, or the year before, or the year before. Right? Even 2018, where we closed down for the year, we were up for the first 3.5 quarters. They can't all be like that, frankly. So I think we all just need to reframe our expectations. Maybe banks outperform relative, Kevin. Your point is well taken. But there's nothing wrong with just doing nothing for a year, going sideways. That's frankly normal. Or even going down. I mean, that's normal too, right? We've had 3 incredible years for the broader market, and I'm talking mostly about SPY and the Qs here. The IWM has been a little bit less good, right? You guys know this by now. But sideways is sort of just what I'm thinking. And I know Dennis, sold some of his long-term QQQs yesterday, and that maybe he's getting a little bearish, but I'm not bearish nor bullish. I think we're just kind of going to be stuck here, and I'm okay with that. It means if you're a long-term investor, this is a good time for you because you're not chasing price. But if you're a trader, it means it means it's tough, right? It means you have to be diligent. If you're going to use stops, your stops could get triggered, right? Physical stops, mental stops. You could get triggered a lot. Or filled a lot. It's not necessarily the best trading environment, right? I know a lot of traders step back. Steve Zach is making also a great point. Or just do the option thing, right? Or just do options. I don't know why it keeps going back to Walmart. Just do options. That's also a good idea, right? We can get to that when we talk options on Benzinga Live next week. We can go through some strategies for how to trade the year if this ends up being if my thesis ends up being correct. I don't know if it will be. But yeah, that's sort of just where everyone that is expecting that is everyone's saying, oh, the market sucks. I think they're wrong. It doesn't suck. It's just not going straight up, and that's okay. Okay. I'll get off my high horse. Just so everyone is aware, coming up next, I'm going to have Scott Kaufman, CEO of Creek Road Miners. Scott's got a very interesting background. Yeah, David, crypto is having a little rally. We can talk about that. Well, we're not going to talk about like specific coins with Scott, but Scott's like he's like a natty gas guy. He's like a natural gas guy. And then he was like, wait a minute, I can use some of my skills to mine crypto. Let me just start doing that. And that's basically what he did. Actually, you know what we can do is, Scott, if you're ready, why don't you give me a thumbs up if you're good to go? And we can just bring you on right now because, like I said, you've got a pretty interesting story here. So, and also we have a couple of videos that are queued up somewhere here. So let's bring on Scott Kaufman again, the CEO of Creek Road Miners. Scott, what's up, man?
Hey, good morning. How are you?
Doing fantastic. How you doing?
I'm doing great, thank you.
Was my tease correct? Right, you're a natty gas guy or an oil guy, and now you're in crypto. What's that about?
Yeah, one of the hats that I wore in my life was in the oil and gas industry. Yes, I've been the CEO of a small oil and gas company for a number of years, and more importantly, have been involved in the ownership of one for a very long time. So it's one of the many hats that I've worn in my career. But yes,
so how does one end up from doing that to doing crypto?
Great story. Well, it's funny. The oil and gas field that we are owners of, we're receiving a lot of calls about the ability to generate electricity through different technologies and sell our electricity into the grid.
Yeah.
And in hearing that story, I said to myself, well, you know, what's interesting about electricity is that we don't necessarily have to sell it into the grid. We could use it ourselves. And this was after my time as the operator and then CEO of this oil and gas company when I was involved in Creek. And coming over the transom with Creek were a lot of M&A opportunities in the cryptocurrency marketplace, as well as the demand from our company for cryptocurrency. So it was almost this perfect storm of the need for cryptos in conjunction with the fact that we were being asked to generate electricity, as well as we're seeing a lot of M&A opportunities coming over the transom in the crypto marketplace. So it was almost this, I don't know, this perfect storm of great opportunities that brought this idea to our head. So it's been a lot of fun. It's been very interesting.
Wait, so first off, when was that? And then like take us through that process. Like what happens next?
Yeah, sure. Absolutely. So it was probably around April, May of 2021 when I was involved in Creek Road Miners. In fact, the previous iteration called Wizard Brands, which was set up as a mini conglomerate. And we were operating online interactive events where we had a pretty substantial marketplace where our attendees were purchasing items online, and there was a demand for NFTs. And we were actually minting NFTs. And the necessity to mint an NFT is crypto. So we had this demand for cryptocurrency. Running parallel to that, again, Wizard was set up more as to build a mini conglomerate. We were seeing a lot of M&A opportunities in the crypto space. And then we were getting phone calls about our oil and gas field, which is non-related to Creek, by the way. I want to be very clear about that, about generating electricity. And you put all those pieces together of April, May of last year, and it made a lot of sense. And I think what's interesting about my background is the ability to analyze these situations and be nimble and transition. So April, May of last year, we put all these pieces together and decided to start exploring and entering into the crypto marketplace, and spent the next number of months really analyzing the space, understanding who the players were, understanding a lot of the difficulties associated with it, as well as understanding what it is that we needed to do to be different. I mean, there are definitively some first movers who are quite sizable in the space. I mean, that's definitive, right?
Right.
And if you're going to ride their coattails, it's great having first movers because you get to learn a lot from them, from not necessarily things that they did wrong, but things that they probably wouldn't do again. And we spent a lot of time putting together our objectives and strategy and launched Creek Road Miners.
This is a really good lesson in business, but also just in investing. And it's like, don't assume just because you're not first or second or even third that you necessarily missed the boat. Like, Scott, you could have said, 2021, doing a crypto miner now? I think I'm a little late to the party, but you didn't say that. You didn't say that.
No. I think what we did is we spent a lot of time looking at these larger companies, and again, our objective isn't to catch them. Right. Our objective is to learn from them and establish something that's different, which again I think is what we've done here at Creek.
Wait, I've got a couple of videos.
Sure.
I'm going to play them, but I have no idea what I'm about to play.
Okay.
So can you please like narrate? I don't know here. Narrate what. Sorry, everyone. That was crazy loud. I apologize. What was that?
Sure. That was the actual first starting of our first Bitcoin mining operation. First of all, my IT department's going to be very angry at me for showing that because of the spaghetti that they saw, which has since been reorganized. But it's also, you can hear how loud they are, which is kind of interesting.
That blew my ears out. Yeah. Wait,
exactly.
we have another one. Is it going to do the same thing?
No. This other one is actually really cool. It actually shows what we were doing. If I could have 1 second before you put it up, because what you're going to show is how we in whole Bitcoin mining operation on a floating barge. I mean, it's mobile. We could do it on land. Now we've done it on water. And it's going to start with this little 4-inch flex line that's connected to a flange with 4 bolts. That is the only thing that is connecting our operations to an oil and gas field. It's really just a small 4-inch pipe with 4 bolts. So please start the video. I can show you. Hopefully I can narrate it a little bit.
Here we go. Okay, so I couldn't hear what you were saying when the video was playing. So please
Sure.
repeat that. But it literally sounds like an airport, like an airplane.
It does. I don't know if you've said close to any of these miners, but they are obviously incredibly loud. And then the turbine itself is our small jet engine. So that container has 5 natural gas turbines, which do sound like jet engines operating off the natural gas that's being provided by the field. But what you saw there was that little steel pipe. It's a 4-inch flex line that carries natural gas from the oil field into what looked like this. It was a sled, a dehydration sled, which removes moisture from the natural gas. And then we feed it directly into the turbine, which generates electricity. Now, what's interesting about the natural gas, too, by the way, is that it's coming from wellheads. It doesn't touch any infrastructure. I mean, literally 100 yards away from where that facility is, there is one wellhead that produces natural gas. So natural gas that hasn't seen the light of day in hundreds of millions of years comes right out of the ground, runs to the aggregation facility through a dehydration sled and generates electricity on the spot. And we turn that directly into cryptocurrencies. And I always said, though, that those 4 bolts that hold that natural gas pipeline connected to the facility, if we were to sell that into the pipeline, which we're connected to, and we would get Henry Hub pricing roughly $4 or $5 per MCF, depending on the day. In today's pricing. But at today's pricing of crypto, we're generating $25 to $30 of crypto. I mean, literally by attaching that pipe and putting up that machinery, we've gone from selling something at $4 to close to $25 to $30.
Someone in the chat was joking, like long bullish copper, I think, based on that on that video. Wait, I want to go back to sort of, if we can, like the core tenants, right? As you're putting, as you were sort of looking at the other miners out there and seeing what they were doing right and wrong, and trying to figure out how you could do it a little bit different. What are sort of the tenants here for Cornerstone?
Yeah, absolutely. And I think it really comes from our objective. I mean, again, we spent a lot of time studying, and our objective, and we feel is a differentiating objective, is quite simple in that we'd like to utilize our own energy. I mean, that in itself is a differentiating factor, utilizing our own energy. I think if you go up one more slide, it'll talk about the 5 cornerstones. But utilizing our own energy, we think that is important. We call that the vertical integration of the whole process. The second component is an energy diversification. And we think that having multiple geographic locations, energy diversification. We think we should have multiple providers of energies to our facilities. For example, I'd rather have, let's say, 100 wellheads providing energy to one aggregation facility as to 1 or 2 very large hydro plants doing it, just in case, of course, one goes down. The third is geographic distribution, have multiple locations. By the way, encompassing all those 3, and I think one of the main objectives with cryptocurrency is continuity of production or continuity of operations. And again, by having the geographic distribution, the energy distribution, and the vertical integration, by eliminating middlemen and people who have control over your energy, I think you've done your best to help with continuity. The 4th cornerstone, as we call it, is that we will be venturing into different cryptocurrencies. It's not only going to be a Bitcoin mining operation. We think you need to changing. And we do firmly believe that currently today, Bitcoin and of course Ethereum, and there's some others that are leading the charge. But as I mentioned earlier, you have to be nimble. I mean, I'm leaning over the bow of the ship and watching the topography change very quickly. You have to be nimble. And the 5th cornerstone is a diversification of revenue streams. We feel that the objective of Creek Road is to build this diversified portfolio, but also to be able to maintain the cryptocurrencies and not have to monetize them as a means of covering operating expenses. I think that if we have other revenue streams, such as, again, operating an oil and natural gas field, you'll have oil revenues, you'll have natural gas revenues that can offset all the operating expenses of the company, thereby enabling you to maintain 100% ownership of all the cryptos that you mine. And these are our strategies that we're striving to deploy to meet our objective. And I think if you look into each one, it's different.
Good question from JD here. What, as far as your stance on your carbon footprint, we hear a lot about that, right? Obviously. So what is your stance there?
Yeah, look, I think whether it's the carbon footprint, of course, which touches on ESG, I think there's 2 levels to discuss, the micro and the macro. However, putting that aside is that we are obviously, as everyone should be, conscious of the carbon footprint, conscious of what it is that we are doing. I mean, there's a lot of arguments to be made by the fact that we're transporting electrons as opposed to molecules that definitively helps the carbon footprint. We do our best to burn the natural gas in the cleanest form possible. There are carbon capture options associated with turbines, which we are looking into and will be deploying in the future. That's our objectives as well. So I think that as you grow and as you evolve, and I do think everything is about moderation as well. We want to be very conscious. We want to be very conscious of the environment. It's definitively on the forefront of our mind as being an oil and gas field operator. It's the environment is key. The environment is essential. So you need to make sure that you're constantly focused on it. Our carbon footprint strategy will evolve, get better and better as we grow. And again, we are an embryonic stage company. So we are learning and getting better every day.
And that's definitely something that I feel like is not going to go away, right? It's only people are going to, and when I say people, I mean like the media, but also like the investing public is going to be harping on this, and not just you, everyone,
yeah, sure.
Right, sure. This is like an industry-wide thing. That's right. So it probably behooves everyone, in the space to be conscious of that. I'm curious as far as the video the second video showed you on a barge, right?
That's correct.
Realistically, like you can do that, which is cool, but like realistically, like what are the benefits of that mobility?
Sure. So I think that if you can do it on the barge, it's a little bit easier to do it on land. Right. So it shows that whether it's on land or whether it's on water, we can do it. Number one. Number two is that by having it on the water like that, number one is that you can actually get closer to the energy source, which from our perspective is key. I mean, as I mentioned, vertical integration is important. The less amount of people that you can use as a means of generating your crypto from energy production, the cheaper your production is. So for example, if we were to own an oil field, again, let's say this oil field was just connected to a natural gas pipeline, if we could actually set up our facilities on land X miles away from the facility, but we'd still have to pay the transportation costs of the natural gas from the wellheads to our facility. But because we can locate our operations right at the source, we don't have to pay those transportation costs. And distance is definitively a key impact on the cost associated with mining.
And what cryptos are we talking about here? What are you actually mining?
So currently we started off with Bitcoin. So that was a Bitcoin mining operation. And I think the next 4 to 5 megawatts of electricity that we currently have on order and will be deploying will be Bitcoin. I've made it very clear in public filings that we will diversify into other cryptos. I think, of course, the natural progression would be into Ethereum, just to understand it. So at this point, we are Bitcoin exclusively, but I wouldn't be surprised in the near future if you saw us start diversifying into other cryptocurrencies, other altcoins.
Yeah. I guess how would you determine what that would be? I don't even know if I've asked anyone this before. I've talked to other miners, but like, how do you determine what cryptos to mine? Is it just the hash rate? I mean,
oh, there we go. I'm back.
Yeah.
I think it's the hash rate. Again, I think that you have to crawl, walk, run when entering into these types of opportunities.
Yeah.
So, for example, I think that we'll first want to make sure that we can do it okay. First, we want to make sure we can mine an altcoin. So we will probably start with Ethereum. I think, though, as we grow and get better, and as, of course, our technology improves and we can be more nimble, I mean, there are obviously technologies out there that enable you to transition which cryptocurrency you're mining literally within an hour,
right,
or even faster. So it enables you to have this pretty diverse strategy of, let's say, okay, we'll do 40% Bitcoin, 40% Ethereum, and today these 6 different altcoins are on a tear. Let's adjust our GPUs and let's start mining for those coins, and at the end of the day, we can sell them. I mean, there's many different strategies that can be deployed associated with that. So I don't know the answer, to be honest with you.
On the topic of geographic diversification, where are you right now? And I don't mean you personally. I
Sure.
mean, like, where is Creek Road right now?
Sure, absolutely.
Although, if you
Well,
want to tell me where you are, I guess that's cool too.
so
I don't.
I'm happy to tell you that I'm here in our corporate offices in Park City, but where Creek Road is, that field that you saw was in the bayous of Louisiana. So if you want to talk about security, it's a definitive 20-minute boat ride out into the bayous to even find the location. However, we are under pretty deep discussions to expand to other territories: Colorado, Utah, New Mexico, Texas, of course. We're talking to opportunities in Canada. I mean, this is, as you can imagine, our opportunities are where is natural gas production.
That is my next question was why Louisiana, but I think you may have just answered that.
Sure. So, what's also interesting too is that people ask us a lot of times, well, Louisiana is a very difficult environment, and I think right now we're fighting freezing temperatures at night in the oil field, which is kind of interesting. You wouldn't expect that in Louisiana. But what's also very interesting too, as I mentioned, the objective is to maintain as close as possible to the energy source. But you also have opportunities that if there are geographic locations where, whether it's the temperature or it's too difficult to operate a mining operation there, you can utilize one strategic facility that is connected to a pipeline, and you can do a take or pay contract where you can actually put natural gas into a pipeline, have them transport it to you to another different geographic location, and pull it out. So a lot of options here with regards to where we can put our locations. A lot of options.
Scott, I'm curious what you've learned, or not what you've learned. What knowledge or skills that you had in oil and gas are transferable to crypto mining?
I think I would say that you never really know. I think that's one thing I've learned in oil and gas that has transferred to cryptocurrency mining. What I mean by that is that in a lot of ways there's some pretty strong similarities. I mean, we go out into a field and try to find some oil. You dig a deep hole, and in a lot of ways you've done your best to determine whether or not you're going to find oil and natural gas, and sometimes you do and sometimes you don't. We are with cryptocurrency mining, we've done our best to get the best technology we can, to get the best information we can. We've joined a pool, and sometimes you get a good amount of crypto, and sometimes you don't. It's definitively hit or miss. So there's a lot of synergies from that perspective with the cryptocurrency mining and the oil and gas. I think that's probably the biggest one. Is that there's nothing certain here.
That probably goes for everything, but you're definitely right. And then is there anything? I mean, as you admitted, you sort of just jumped into this thing. So I'm not really sure how far ahead you thought at the time, but is there anything you just did not see, any vulnerability or risk you just did not see coming? Any challenge you just did not? You were like, "What? I did not know this was a thing."
I didn't have any real expectations. Again, with my background, I've done a bunch of whether it's turnarounds or growth opportunities. The one thing I always knew is that you need to do two things: one, expect the unexpected, but number two, I like to be very hands-on. I mean, the first facility that we built, I actually drove. We had the cryptocurrency miners delivered. I physically drove them to the barge. I physically unloaded the boxes. I physically, personally put them in the racks and connected them. I mean, I wanted to learn the whole experience. So the one thing I knew is that I did know as much as what I was doing. I do know much more now, but I had a lot of hands-on experience in building out the whole infrastructure. So I think that's the bigger point to your question, is that went in with eyes wide open, knowing that I didn't know very much at that time. Were incredibly knowledgeable, and they helped and guided me through. And you're talking to a CEO who has unpacked a box and put 180 cryptocurrency miners on the rack and plugged in the network cords and the power outlets. I mean, and everything from that all the way up to where we are today. I understand all the aspects of our business, which is fun.
If there are any questions for Scott about Scott or about Creek Road or about crypto in general, speak now or forever hold your peace. Scott Kaufman has been on with us. He is the CEO of Creek Road Miners. Ticker up on the bottom of the screen there. Scott, this has been fantastic. I always enjoy talking to people that just make dramatic career pivots, because it's such a it's such an interesting thing and something that I would probably be afraid to do. So I appreciate you coming on and talking about it a little bit, and we will be keeping tabs on Creek Road and your updates on there, and you keep us in loop as well as far as your updates that down the road. Oh, here's one before I let you go from Edge.
Sure.
Do you sell your crypto or do you just hold it?
No, our objective is to hold on to our crypto.
Okay.
I think that as a mining company, right now we're building inventory, and I think with the halving coming up in a year and a half, again, we want to hold our crypto as long as we can. That's our objective.
Here we go. Scott Kaufman, a pleasure, man. Have a great rest of your Friday. And we'll be in touch. Have a good
Spencer,
one.
thank you so much for your time. Everyone, thank you for listening in. And I look forward to hearing from anyone if they want to. My email is on my website. So thank you so much, everyone.
I also love when CEOs put their emails up on their job. Our CEO puts his email in the chat, says email him. I love when CEOs make their emails public. And in some cases, their phone numbers, which our CEO also does, which I think is weird, but here I am. Okay, it's 10:18. So here's what we're going to do right now. I want to bring on our next speaker. Unfortunately, this next speaker, they're over in Israel. It's a little bit late for them there. They could not do this segment live. So we had to pre-record this. Was it yesterday or 2 days ago? I don't even remember anymore. But I'm talking to Save Foods. I'm talking to their CEO, Dan Sztybel. This is a pre-recorded segment I did with Dan. Save Foods is basically into these. So I'm not going to tease it too much because we get into it, on the recording. But it's kind of like supply chain of food and impacting that. They have a solution, a product that makes fruits and vegetables last longer. We talked more about that and about the market the last couple of years, what their product actually does. So without further ado, I'm going to play that interview again. This was pre-recorded the other day. I'm still going to be in the chat. Mitch is in the chat. Mitch is actually going to come on after this segment. It's going to go, the recording lasts around 19 minutes or so. So at around 10:40, I'll be back on. Mitch will be back on, and we're going to talk stocks for 20 minutes. Mitch and I are going to do a market update. We're just going to hang with y'all. So I would say just because I'm in a pre-recorded segment does not mean I'm leaving. I'm still going to be here. So without further ado, here is my chat with Dan Sztybel, the CEO of Save Foods, from the other day. What is up, everybody? How's it going? Spencer Israel here. I've got my next speaker here right now. His name is Dan Sztybel. He's the CEO of Save Foods. This is a topic that is extremely relevant, a company that is extremely relevant today. And we'll get into why, but you'll understand why in a moment. So without further ado, let me just bring on Dan right now. Dan Sztybel, Save Foods CEO. Welcome to the show. How are we doing today?
Hi, Spencer. Good. How are you?
Doing fantastic. So let's just start with actually, before we get to the company, I do like to just briefly touch on your background, right?
Sure.
I mean, you were not always at Save Foods. You have a pretty interesting story. So just walk us through just quickly your career journey and how you got here.
Yeah, sure. So first I moved to Israel when I was 18, and I started to study biology, molecular biology and genetics, and then I moved on to the health tech industry for more than 15 years. Wow. And during my career in the health tech industry, one of my tasks was to look at technologies, So foods and food waste and healthy was always connected to the world of health. And during my last position, I was at a fund. We created a large funds in Israel, and we looked at different type of technology from medical device, food tech, agri-tech, and some friends came up with this company, and we look at it, and I have to tell you the truth, we fell in love with it. And I even decided to invest on a personal way after doing some due diligence. And 6 months later, the new management of the company or the new investors of the company decided to do a restart, and they brought me in.
And that was that.
Yeah, and that was
Yeah.
it.
Okay, so Safe Foods here, we're talking about food waste. And the reason I said that this is relevant now is because obviously there's a lot of attention being paid globally to supply chains of goods, supply chains of the durable goods, of appliances, of electronics, but also supply chains of food, right? And the entire global supply chain is sort of dealing with the shock that has been the pandemic right now. And this is a company that is involved in that in a way, right?
Directly involved with that,
Yeah.
I have to say, and one of the main challenges of these new, I would say, timing, right, of these, traveling goods from one side of the world to another.
Yeah.
It's especially challenging for fruits and vegetables, right? Because, sometimes they have to survive that journey. And today, most of the, I would say, countries, regulation, and also users and people like you and me, we would like to have fruits that are healthy and not treated with a lot of pesticide and chemicals and stuff like that. So it's make it even more challenging, right, for the packers to ship that fruit, because now no more protection. So what do you do? And today the fruits get into the destination not always in a good shape. I would say the increase of food waste, the food waste, it has increased significantly during now the pandemic, and that's where Safe Food is coming in.
So yeah, maybe we should just go into that next. What exactly is Safe Food doing here?
So Safe Foods, has developed a technology that extend the shelf life of fruits and vegetables, but also ensure the food safety. And how we doing that? We are actually using the inside. And this is a good picture. I will explain it in a second. But we actually using the inside of the fruit to protect the outside from all the pathogens, that are around. Fungi responsible for the fruit decay, but also the foodborne pathogens. And I'm sure you're familiar with the Salmonella, E. coli, Listeria, that are responsible, for big food recalls. And what we can see here in this picture is that we have successfully extended the shelf life of raspberries. And you can see the difference, right? On the left side, you see there's no treatment, because today raspberries cannot be treated. They're actually being packed and then shipped. And you can see that after here, it's 11 days at cold storage and another 4 days of shelf life. We have reduced the waste by more than 80%, which is huge, by the way.
So explain this again, though. You said you're using the inside to preserve the outside. Explain how does that work?
How does it work? So what we have done, we actually using a blend of food acids that you can find in your foods, mainly in fruits and vegetables, right? And we combine that with what we call an oxidizer, which is a very strong molecule helping killing pathogens. And the combination of these two products make it very, very efficient against all type of pathogens. And that's bring, I would say, for the first time, a very and highly efficient product, green, healthy, non-toxic, to the industry, right? That has a very good effect in killing pathogen and then reducing waste and also ensuring safety.
So I guess what is the purpose here? Is it just to keep food fresh longer? Is it to make it is it to keep it looking fresher? Like, a lot of times, like, food is like, it's still like fruits or vegetables, like, they're still good. They may not look good, but like, they're still good to eat. You know what I mean? Even if they don't look good. So like, what is the main goal here?
So if you look at and another picture that I've sent you, if you can put up the second picture here, you will see that here the fruits is actually started to rotten, right? And that's probably fruits that you will never eat, because pathogens started to impact the fruit, and now you will have to throw it away. And the role here of Safe Foods is to remove these pathogens, right? To remove as long as possible the impact potential pathogens, could have on the fruits. And you can see here avocado. Here the avocado is more than 20 days on the shelf, so outside room temperature. And you can see that the avocado that was treated with safe foods, fresher for longer. And also, the mango here. The mango that you can see on that picture has 75% less fungicide that are usually today on the market. And this is huge, especially when you import these products or you export this product to Europe, where the regulation is very, very strict in terms of what type of fungicide and how many fungicide you can use.
So, who are your customers? Are you selling this the solution to grocers? Are you selling it to the farmers? I mean, who are you selling this to?
So the first users of our technology are the packing house. They are the one really where we can have the most impact, because as soon as the pathogen, actually, if let's go back a little bit on history, once the fruit is being packed right from the field, this is the time where the pathogen can start impacting the fruit. So if we can start treating the fruit at the source of the problem, the impact will be much higher, right? So it's like taking a patient, right? If someone is sick, if you can treat it really early in the disease, the result will be much better, right? Instead of treating someone when he's already very sick. So this is why we have targeted first the packing house, because this is where the fruits are being usually infected by the potential pathogens. So packing house are our first customers, but we're also working a lot with food retailers, right? Because food retailers are the one we can see the impact, because they are the one where the fruit actually start to rotten and they have to throw it away and they cannot sell it. By the way, some of the largest retailers in the US reported that the lime that were treated with safe foods stay for 5 more days on the shelf. So this is huge, right? And you can understand why. It's more fruits to sell, less waste to deal with. And I don't know if you know, but to deal with food waste costs a lot of money. And you have to take it to landfills, you have to pay for that, and you also have to putting fruit in landfills creates greenhouse gases, which has another bad impact.
Forgive my ignorance here, but when you say the packing houses, are those separate from the producers, or
no? Usually
they're the same.
Usually it's the same.
Okay,
you can see that you're right. The growers, I would say, usually have their own packing house. There, and that's where
Got it.
The
So
packing
are we talking? Is this like actually maybe before I ask specific foods? I mean, how do we know this is safe? What regulatory framework have you had to?
So
pass
first, we the fact that it's that safe, we didn't have to pass any specific regulatory, because the FDA already recognized every ingredient we have as safe.
Okay.
It's called GRAS, right? And usually that's what I told you. We're using the inside of the fruit to protect the outside. So you will find more of our product inside the fruit than what we're applying. So this is really the beauty of it, because, and I'm sure you understand that, is not only it's easy to implement, but it's also easy and fast to put into the market, because regulation is very easy.
So what we're talking all fruits and vegetables, is that the universe here?
So as a start, it's fruits and vegetables, because we're a small startup and we have to focus, but definitely in the future we can definitely apply the technology to meat, chicken, poultry, fish, which is also a big industry. We have started actually to address the fresh cut, all the salads and fresh cut vegetables and fresh cut fruits that are used today, that you can find all over, because they suffer from a short shelf life and also from food safety issues. And there we can already report on very good results on salads and fresh cut fruits.
I'm just curious what the last 2 years have been like for you, and for Safe Food just as a whole, right? We've all experienced moments at least in the US, right, in the last 2 years where we've gone to the grocery store and like, oh, they like don't have any of that right now for whatever reason. Something along the supply chain got screwed up somewhere, and there's nothing like on the shelf, right? And there's been like ebbs and flows of I mean, there's always demand for food, but like it's definitely like ebbed and flowed in the last 2 years. So, what has the last 2 years been like, just in terms of the business?
So in terms of the business, we really restarted the company 3 years ago. So when the COVID started to spread around the world, this is really the time when we started to move from the R&D to large pilots. So we had a little, we had to slow down. Most of our pilots were done in California, Mexico, Europe, etc. Also in Israel, but we were very limited in what we could do. But what happened with the pandemic is that the world realized the importance of technology like safe foods, right? Because suddenly what's the most important is like food. We need food. We can live without computers. We can live without a lot of different things, but you need to have food on your table.
Yeah.
And if you're not able to get that because the food is stuck somewhere, so this has had a very good impact for the business for us. And despite the difficulties with traveling, etc., we see that the customers and packing house and also food retailers were really in demanding for product like us, and it has been incredible. The numbers of pilots we've been able to run for the last 2 years allow us now. It really allows us now to move for the last few months to the commercial stage.
Okay. So what markets are you in right now, and what markets are you planning on getting in on this year?
So we just we have started to sell in California, in Mexico, in Israel, and Turkey. And the crops that we are currently treating is like clementine, limes, lemons, and also all different type of citrus, bell peppers, avocado, dates. And we are moving now on mangoes, berries, broccoli, pears, tomato, asparagus.
So do you have to
etc.
do you have to like test the solution on every new food and vegetable, like, and how long does that take for you to figure that out?
So we don't have to test. We have to test it just to make sure this doesn't have a bad impact, but we don't have to develop new products for each new fruits or vegetables. And this is also part of the beauty, because our products are against the pathogens, right? So it doesn't really matter where the pathogen are. So what's really we need to do is mainly to do some protocol adaptation, right?
Okay.
And it's pretty fast, I would say. A couple of months, and we're ready to go with new fruits and vegetables.
All right, let's talk about intellectual property. Obviously, you've developed the solution yourself. Is it IP protected?
Sure.
What patents do you have? What is to stop me from deciding to become a chemist tomorrow and making my own solution, my own safe foods solution?
Great. So first, we have patent protected. We have more.
Okay.
We have 7 patents granted. Actually, we have 5 more that are ongoing. A new patent application. We all the time creating more and more IP around the technology and synergy with other products. But you ask a very good question. What would make you, a good chemist and look at the product and say, okay, I can do the same tomorrow? So, to be honest with you, not very difficult. A bad chemist will take a week or 2. A very good chemist will take 5 days to find out what are different products. But this is not only to know what's the product. There's also a very big layer of, because it's different chemicals, right? Even it's natural product, but you need to get to the right equilibrium, right, between all the different products, all the different ingredients. And this is part of our trade secret. And the second thing is that we also invested a lot of time in the production process, right, to make it very cheap and easy to scale. The scalability of that is very easy, and cheap as well. So, you can tell me, okay, Dan, what will happen if tomorrow all the packing house would like to use your product? How long it will take you to get to the market? And I will tell you, it will take me less than a month.
From the time you conceptualize,
from the time I have to actually produce my ingredient, my product, right? The production will be very, very fast because with the IP is also on the production. So, it allows me to scale up very easily and fast.
So, you kind of already answered this in terms of like your customer breakdown, but like going forward, what is your like ideal customer breakdown? Where are most of your customers coming from 2, 3, 5 years down the line? Is it still the packaging houses, or are you mostly selling? Is the idea here to be selling to every major grocer in the United States and elsewhere? Or what is the plan there?
So it will be actually a combination of both. We will start with the packing house because it's where the most we will have the best, I would say, impact on the shelf life. But then we will move, as we're starting now, to the grocery shops, to the retailers, so they can use our technology in the stores or in their storage room, right? So they could actually prolong the impact of safe foods on the shelf life. And the dream will be to have a product, not really a dream. I mean, we believe we will get to that, a product for the end users. So you can use at home. You will go to the shop. You will bring your fruits and vegetables, and you will use safe foods before you put your products, you produce in your fridge, and they will stay for long.
Dan, let me ask you this: is there a cannabis angle here?
Yeah, definitely. We definitely just released some news about our the potential of our product here in cannabis. We see that we are very efficient also against the pathogens that have create big problem for the cannabis industry, and we believe that in the next few months we'll start large trials in the U.S. on the cannabis as well.
And then just to wrap it up here, what is the top priority for this year, aside from obviously more sales and continuing your pilot programs? Is there a specific top priority you have right now? You guys got through last year was a big year because you all listed to the NASDAQ here in the U.S. But for the company here, what is priority number one right now for the year?
So as you mentioned, really increase our sales.
Yeah.
Get to continue to get to more clients, and also to get to key clients. So we're currently working, with I can mention in San Pacific in California, which is really one of the largest packing house in California in citrus, working with clients like Scisparc in Mexico, which is a huge packer of limes in Mexico, and Mehadrin in Israel, which is the largest packers, and we're moving with Galil Export to continuing to get to these really flagship of the industry, to allow us, to have we call it the snowball effect, and I think this will be the main goal for the year.
All right, Dan Sztybel is the CEO of Safe Foods. The ticker is up on the screen. It's SVFD. Dan, I know it is super late for you. I appreciate you taking time today to hang out with me, and good luck going forward.
That was my pleasure. Thank you very much, Spencer, for taking the time and making an occasion to speak about Safe Foods.
All right, so that was Safe Foods there. Mitch, what up, man? How we doing? Can you hear me, Mitch? Oh,
now I got you.
Now you got me.
What up, man? So my bad. I had to switch the audio there. All right.
That's all good. What's up? So we're going to spend the next few minutes just hanging out like we always do, talking about the market, looking at Benzinga Pro, looking at what's up, what is down. I'm going to share my charts right about, or my screen at least, right about now. I've got just a watch list up of the market, and what jumps out to me is more red than green. But look at technology. Look at yep. I see you, Apple, Facebook, Google, Microsoft. I see you. Look at the
Yes,
XLK.
but the only thing that's a little concerning about that tech move is that it's kind of the bigger names, right? Some of the smaller names are still getting dropped, still getting hit, and the overall market got a little bit of a bounce there. You could see on the SPY that it bounced on up there. We got towards a high on the intraday of 464.86, but really rejecting it back above that 465. So that's kind of the level that I'd be looking for the upside if we could get back above. But right now we're looking like we're heading back down to underneath VWAP and looking like we could test down towards the 460s. Looks like we got a little bit of a trappy open here. It was a little trappy there. If you saw some of these names that have been beaten down, they did bounce pretty significantly right out the gates there. I could call out, like, let's say solar, some solar names, SOL, or let's go EMPH. Let's go EMPH that actually went up and down. It's going to look very similar to the market. This is exactly what we got, right? A little bit of a bounce right out the gates, coming back up here. It tried to hold the 145, started making everything in solar. Everything was starting to point to the upside. Then what did you see? As we got towards around 10:30 or 10:20, that's when we started turning back around. And you can see the same thing on the overall market. The top of the market in the intraday was at exactly 10:20. So there you guys have it. That's pretty much the market we're getting right now. We're getting these dead cat bounces. Really, that's what you call these. When you see big flush down moves, then you bounce on up to a resistance, then flush down from those levels. That's exactly what a dead cat bounce is. It's a tough market out there right now. My swing trade, I took off today, a loser, 3.8% loser. Goldman Sachs got sacked. It just doesn't want to hold.
Well, it's down today with the whole sector, and I would forgive someone I would forgive you, Mitch, for doing a swing long here on the banks, because the banks have been strong, and Goldman Sachs reports earnings on Tuesday. But the reaction to the banks' earnings this morning that we got, JP Morgan, Wells Fargo, Citi, the reaction has not been great. I'm not ready to call the trend over yet, because it's not unusual to see the bank stocks react negatively to their earnings reports. But they were good reports. Wow, look at that JP Morgan. Wow, look at that.
Yeah.
You know what, though? It wouldn't shock me for a second if by today's Friday, right? We're closed on Monday. If by like Wednesday or Thursday, JP Morgan is back at 170. They wouldn't shock me for a minute.
Well, let's take a look at some of these stocks that are actually getting on the downside today. The utilities were in strength, right? And now they're actually pulling back a little bit here. You could take a look at maybe NUE. Duke is another one that I like. So definitely getting a little bit of a pullback here after a period of strength, right? And the question is, with the energy kind of turning around too, and we could take a look here. It's utilities that are turning around, not energy. But the big thing I have a question on is, do these utilities kind of come back? I mean, if energy is going to keep ripping, well, what's up with the utilities and why are they going down?
Well, I think it's very clearly moving opposite of tech. So let's go to the XLU and let's compare the XLU with the XLK. And I'm just it seems like this relationship has been pretty clear. On days where tech is down, utilities are up, and on days where utilities are up, or where utilities are down, tech is up. And so today, utilities are down, technology is up. Let's go to an intraday chart here, a 15-minute chart. But I mean, the relationship. I mean, the inverse correlation looks like it's pretty strong to me, right? You just see it here the past few days, right? They just crisscross all the time. So I think you can play that off each other. I don't know what utilities are going to keep doing here going forward, but you just play this inverse relationship off each other. Play tech against utilities is what I would do.
Well, the China trade not looking too bad today if you want to look at PDD.
Pinduoduo. Don't they have earnings like soon, or they just had earnings, something like that? They're weird. Oh, they got an upgrade. All right, cool.
Oh, it looks like the upgrade there. The
This-
old
no,
upgrade.
I would not. This does not excite me. Sorry, anyone in Pinduoduo. This does not excite me. Holy cow.
Yeah, JD bouncing back a little bit. We were going to watch to see if those bounce back a little bit, but not the best move, just like kind of really small moves. 1% move, 1.09% move in JD, about 3% move in PDD. But for that case, let's look at Baba. Baba's up about 1.24. So you guys can probably take a look at that one. And I mean, I'm just not seeing much out there today. I don't know about you.
TLT and Jay Rice is right. TLT is the move today is very interesting. Bonds are getting expensive, and I'm sorry, yields are getting expensive. That's what I was trying to say. And yeah, this move in the TLT is super notable. I mean, the market is like it's acting as if rate hike one. Okay, rate hikes are a foregone conclusion, but I don't know if we can agree on the quantity of them, whether it's 2, 3, or 4. Bond market acting like 4 is like a foregone conclusion, and that I guess what is it saying? Inflation is more persistent. I suppose is what that's saying. But yeah, the bond market being down today would also have an impact on the banks. So,
well, if we took a look at some of the China stocks, we can talk about the casinos, right? I mean, we got big news out of them. Let's take a look at LVS. It's still holding the gains right now. I do think it's getting to the point where it's getting overextended here at 43. It does look like it's getting towards a little bit of a toppy action here, but not a bad move there for LVS. I think overall it's up about 13.78%. Not a bad day there.
Wait, yeah. I want to go back to the TLT for a second. I just saw this stat. It's a couple days old by now.
Okay.
It's from Lisa Abramovich. She's at Charles Schwab, and she noted that the TLT, this is last week. The TLT last week showed its biggest weekly outflow since March 2020, since peak COVID. Almost $1.4 billion of money left the TLT ETF last week. People are just like, how can you own bonds? How can you own bonds in an inflationary environment? You really can't. I mean, you can own tips of a certain kind. You can own I bonds, really, right? But like, you can't really own. This is the 10-year Treasury. You really can't own. I'm sorry, 20-year. You can't own 20-year bonds when inflation is running 6, 7, 8, 9%. I mean, you can't do it. I mean, so the largest weekly outflows for TLT last week, and now it's been almost 2 years now since March 2020. That tells you, I think, all you need to know, right? Is that where you're going to hide. You can't hide in bonds. You also can't really hide in. It's so funny, like it's so interesting. You can't hide in bonds because of inflation. You can't hide in stocks because rate hikes, right? You can't hide.
Where do you go hiding? Really?
It's a sticky wicket. I'll tell you what it is. It's a sticky wicket. I'm not sure. Beach Bum, I think we are long past the transitory thing. I was sympathetic to the transitory argument 4 months ago, 5 months ago, but it's been 6 months now, and even the Fed has said, okay, we screwed the pooch on that one. So I think we can put that to bed. Back to the casinos here. So yeah, Las Vegas Sands, which you mentioned, was among the group trading higher this morning because of the decision, the new regulation out of Macau, and it's mostly holding. The check on win. These chart mostly identical. Melco was a big one because Melco was a much lower price stock, and so therefore had a much bigger move on a percentage basis this morning. Melco, new high of day. All right, $11. MLCO, and then MGM was your last one. all these charts look identical. Well, no, MGM. Oh, MGM has less exposure to Macau. MGM actually looks like it is wants to go red. It is red from the open here today. MGM. That's interesting. So.
All right, guys. Why not just have some fun and maybe take a trade right now? I'm looking at CRM for a short here. Just took it there at 36. Willing to add here a little bit up, but just took it right now.
CRM
short. CRM short here, guys.
For a short. I mean, on a day where tech is down, that's not a bad idea. CRM can sometimes kind of do its own thing. I've noticed that there have been days where like all of tech is up and CRM is down, or vice versa.
Now, if you remember, you weren't there, Spencer, but I talked about it on pre-market prep. The area of concern for me is software application. That's the area where I see a lot of these inflated PEs and big growth outlooks. So many software has come out, but is all this software really worth this much money? I think we're finding out that it just might not be, because if you look around at software names, they're getting destroyed.
Out of curiosity here, does anybody remember when Salesforce bought Slack? I could look in Pro, but I'm just gonna Google it real fast. Salesforce is Slack. When did that happen? It's 2019, no, 2020, 2020, wasn't it? Let's go to the daily. See if we could see the daily chart when Salesforce bought Slack. We have a date here. The acquisition was December of 2020. Yeah, December of 2020. All right. So
I'll show you.
Oh yeah, that gap down. Yeah, there it is. I was wondering. So that gap down right there.
I'm going to show you a chart here that should put you why I'm so red flagged.
Yeah.
You know, right now we have this word, right? Metaverse, right? That's like one of the hot words that can make stocks come up. Look at MTTR, a stock that was pushed by analysts about the metaverse. Look how it's doing now. Boom. Crushed, guys. Crushed on the downside, guys. And this is a stock that, you know, everyone was like, oh, but metaverse. They got the metaverse play. They got the construction play. It's going up. The market is just not liking anything that's like hypey, sexy right now. It's just not there, guys. So MTTR definitely struggling there. And we're going to see if these software names keep coming on down.
Yeah. I mean, it's growth. And Jay Rice, I see your point about cash, but also like holding cash is tough. And they basically, inflation is just a massive drag on everything. The only way you beat inflation, I fear, is like owning something that would outpace it. But the only things that would outpace inflation are you have to go further out on the risk spectrum, and then you're just taking more risk. Like, you know what I mean? So I don't know. It's so tough. Inflation's a bugger.
Yeah, it's difficult. You know, I thought that maybe like Uber would finally get going this year. And even Uber as a software company that's a favorite, right, is still not doing well in this environment. Yeah, we come up from those lows in December, but I think we eventually take out those lows. And I think you could see Uber down towards 20 in that kind of sense. And for that case, I mean, look at Coin. I think that takes out the low, the 52-week low, and keeps coming on down. So just be careful out there, guys. I'm just not confident in any of these software names coming back, at least right now.
All right, they're talking about BBIG in the chat. I'll bring the chart up.
Bring it up.
Is there any news? I'm being completely serious. I don't actually know. Is there any news?
There might have been some yesterday, but I know it's been one of the heaviest watch stocks. We actually traded this one yesterday on live trading at $3.
So no press releases, no SEC filings, nothing from our news desk. Okay, so let's go back.
Retail attention.
So let's go back to the chart. All right. Yes, unquestionably great 3 days, right? 4 days, you can even say.
Mm-hmm.
It's been a very good week for BBIG. I will give you that. I won't take that away from you. But I'm willing to bet that almost everyone who owns this stock owns it from 6, 7, 8, 9, 10, 11, right? Not 3 where we are. I think if you're long, if you're underwater, then yeah, keep on rooting for it. But what are you going to do? And this is something you need to think about. What are you going to do if the ceiling is 4, or if the ceiling is 450? You know, if we bounce below, we hit 450 and we bounce down to 3. We hit 5, we bounce down to 4, bounce down. What are you going to do? Right? Are you just going to wait and hope it gets back to 6, 7, 8, 9, 10? That's not a plan. That's just hopium. It's nothing. So that's all I got for you.
Dylan says guns never lose their value, man. Guess we got to trade some guns.
Ammo definitely doesn't lose its
ammo.
Yeah. But look, I'm not going to take BBIG away from you. It's had a great week, right? Certainly, it can do it once. If it can go to 12 once, it can go to 12 again. I'm not saying it can't, but if you're just hoping this thing can go up there, and that's why you're not selling, that is not a viable solution. That's not a viable plan, I think. So have a plan. What are you going to do if it really does, top out at $4 here, or $4.50, or $5 or $6? Right? Well, what are you going to do? Have a plan. That's all I'm saying. We're trying to get them on Benzinga Live. They're being very difficult right now, and very cagey, to be honest with you. So when we have an update, we'll update you guys. But we got 2 minutes left, Mitch, before our next guest here. Any final thoughts for us? Dylan says short BBIG. Go for it, Dylan. I mean, I don't know.
Yeah, I'm still short on that CRM, so we'll see what happens on CRM. But I would definitely say let's take a look at the crypto for a second before we get on off. Yep. Because crypto's the concern, right? Does it go with the market and really just start crushing down? Do we get into a bear market in crypto? I've been calling out that the real concerning one is not Bitcoin to me. It's Ethereum, because of the connection with the NFTs. Because if NFTs go, Ethereum goes. If Ethereum goes, NFT goes. They're hand in hand now. It's kind of the underlining asset behind the NFT game now. So you have to keep your eyes on these, because if we do get caught in kind of a downturn in crypto, I say you got to be careful with those NFTs out there, because I think some people are going to be really stuck with the bag. And then what happens is, do the people just start selling out? That's the question.
Ask yourself if you would rather sell early or sell too late. I'd rather just sell early. I'd rather miss the top by a mile than get stuck holding the bag on the way down. That's just me. Everyone, that may not be you, but that's how I feel.
And I'll put a warning out there. I mean, and like always, be careful when you fall in love with stocks. I mean, a clear example, you guys know, I fell in love with Genie, and I'm still holding it. There's a reason why. You got to be careful when you're falling in love with stocks in an environment like this.
Yep, that's it. That's it right there. Please don't fall in love with stocks. All right, Money Mitch, man, we will catch you a little bit later. I was going to say we'll catch you tomorrow, but we will not catch you tomorrow. Hopefully, so I guess we'll be back on Tuesday, man, for live trading.
Take care.
All righty. Let's move it right along. Just to bring up the schedule once again here. Here's where we're at. We'll go a little bigger. We are coming up to what I would call the home stretch here of this show. Our second to last company today. We're talking to BioLargo and their CEO, Dennis Calvert. Oh, I'm off screen there. That's better. Graphics in my way. Dennis Calvert, CEO of BioLargo. I'm going to bring Dennis on the show right now. Give me a thumbs up, sir, if you're ready. Yes, he's ready. Let's bring him on. And there he is. How are we doing today, sir?
Hey, Spencer. I'm doing awesome. How you?
Doing awesome. That's awesome to hear. I'm also doing awesome. So let's start with this. I never want to assume anybody knows anything. So BioLargo, you deal with PFAS. Explain that. What is PFAS? Let's just get the foundation out of the way.
Yes. So the company is really a science and engineering company, right? So we focus on big challenges, creating solutions, become a solution provider in technology. So it's technology with solutions, solving big problems. PFAS is one of those. So PFAS stands for per and polyalkali substances, PFAS. that relates to the nonstick coatings. So that's the chemistry behind nonstick coatings that was used in products for 38 years. It's now it's often called the contaminant of the decade. And it's a hot topic. It's a hot topic all over the environmental space because the PFAS is, quote, everywhere. I mean, it's incredible. And the way to think about PFAS, it was, the first public sort of outreach was the movie Dark Waters.
Mm-hmm.
Right?
I remember that.
Yep. So Mark Ruffalo played Robert Bilott, and that was about 2.5 years ago. And it really exposed this case, this litigation case against major industry chemical producers who used this nonstick coating, and it was a multi-billion-dollar products. And so it became, commonplace. It was in your carpets and food coatings and cosmetics. And okay, so the problem is, we always say, don't mess with Mother Nature. Whatever you do, don't mess with Mother Nature. Well, PFAS is a compound, fluorine compound, that's designed to not break down in nature.
Okay.
It's actually built to last forever. Okay, so you know what the problem is? When you put a little bit of something like that in the environment and you do it for something like 30 plus years, it accumulates, it bioaccumulates. And of course, it's been linked to adverse health effects like birth defects and cancer. And it's just, a little bit forever is a big problem because it accumulates. So we're out to help solve that problem with a new innovation, and we're doing commercial trials right now. We're about to go commercial.
So let's talk about that. What is that? What's the innovation there?
We call it the AEC. It's basically a device that you can flow water through. And when the water flows through, it's like a cell. And as the water flows through this little cell, it migrates the PFAS in the flow of water to its opposite charge, to a polar opposite, and across a membrane. And the membrane collects the PFAS. So what's unusual about that innovation is it allows for selective, precise extraction. So it really is a significant advancement, technical leap forward, if you will. That innovation called the AEC, we've been working on about 2.5 years. We're just now in commercial work with clients and about to go commercial. So we're doing sort of final testing before you launch with the customers. And the significance of the market and the impact for BioLargo, we believe, is going to be pretty dramatic.
All right. And just real fast, just to give people some background, you have been at BioLargo almost since Genesis. It's a little complicated, the story. So because there was a reverse merger or something going on. So
so I met the inventor. Well, the thing to think about. So first of all, BioLargo has a bunch of technology. Yeah. The PFAS extraction is one of them. There's actually about 7 technologies in the portfolio. We've developed all these, either bought them or developed them. And we have a portfolio of environmental solutions combined with a full service environmental engineering firm. Okay. So we can sell it in, essentially take on a big challenge and make a solution.
Okay.
I met the first inventor, Ken Code. So he's really the founder. And we formed a business deal in the spring of 2007. And we started BioLargo. Now, he had some years of work prior to that, mostly on the innovation itself. I joined him as we really believed that innovation would spawn a vast commercial portfolio. And so we've been working on that now for quite some time. And we've continued to invent. We've added additional inventors. We now have sort of a think tank of talent here, extraordinary talent, PhDs, environmental engineers with 30 years experience. So the innovation continues. We're filing patents on a regular basis, and we're always looking for the cutting edge where we can make an impact with our toolkit.
So I'm going to bring this up. I think this does a decent job of explaining just visually something that you were talking about before, right? The AEC.
Yeah, the AEC.
Yep. And so can you just sort of explain this graphic for us?
Yeah. So Spencer, the thing about the AEC, so let's start with the competition, and then we'll compare it real quick. So the competition really is a granular activated carbon. That's sort of the old incumbent technology. It's been around forever. And so, the way carbon works is it's got a charge, water flows through it, the opposites attract, and they bind to the surface of this highly porous material. That's carbon, right? So it works. Carbon's actually a solution that will remove PFAS. You know what the problem is? It also takes everything else out. So it can't do selective extraction. So what happens, as the third image, when you're done treating the water and you want to take the PFAS out, that's now measured in the parts per trillion. So think about that. That's like a grain of sand in a swimming pool.
Okay.
All right. You end up with a truckload of carbon versus a small container of our membrane. So the environmental impact for carbon is it's really almost a non-starter. But because it's the only incumbent that's known to take out PFAS in a effective way, not efficient, but effective, it's being deployed. So we come in with an innovation that's 1/1000th the waste stream, 1/1000th, which is pretty dramatic.
I'm glad you mentioned that, because this is not the only solution out there.
No.
Yeah.
This is a very competitive market. Every major engineering, especially environmental engineering firm in the world, has a PFAS.
Right.
Any major water company is going to be in a PFAS solution mode. Right. There's also anion exchange, which is membrane exchange, but none presents the selective extraction that we do. So we believe that our technology has the chance really to be number one in the market. Number one, meaning the most cost-effective, broad, available to work in a broad range of different waters, saves a bunch of money, and of course, the environmental impact and the waste savings is just astronomical.
So, like, what in terms of just like the business path forward? I mean,
Sure.
like, are we talking like, are we talking partnerships? I mean, how do you actually like bring this thing to market?
Well, it's a good question. You know, as a technology innovator, our thesis really is to take the technology through its first commercial adoption on our own resources. Why? Because we don't need help. We have the financial resources, we have the talent to do that work. As we always say, we like to do the heaviest lift on our own, because bringing them in too early jeopardizes knowledge and technology. It also really is just prior to its full value being realized. And we think that when it gets into that commercial mode, then you're sort of locked and loaded to go to market. Now, once you do that, so let me give you an example. At this stage, we're now we have a backlog of client opportunities that is literally in the hundreds of millions. It's the hundreds of millions of dollars, okay, project. In the average project, when we first started, we thought, these projects are going to be $500,000 to maybe 15 million. We're actually looking at projects that are in the 100 million range. It's an astonishing thing, okay? And the reason is because the Biden administration picked this target as one of its top environmental issues. There's allocation of like 10 billion, okay, for this purpose. Plus the EPA has designated PFAS as a hazmat. And so there's this encroaching regulatory enforcement. And of course, in the progressive states like California, they're moving really fast. They're already building and installing systems. Okay. In that scheme, there's a environmental design, there's a design component, there's a construction component, and there's an equipment, and then there's the replacement and maintenance. So in the long haul, the way the company will participate in the early days is we do everything we have to do. We have the talent to do that, and we can do 1, and we can do 2, and we can do 5. We probably couldn't do 500. So what we'll do, and what we are doing, is actually aligning ourselves with environmental engineering groups that already have the client and are looking for the solution. And that's actually how the product gets sold in. Just this last week, we got a call from an engineering group, and they said, we've been watching you for 3 years. Congratulations. It looks like you're about ready for market. I said, yes, we are. And they said, well, can we do a deep dive? We said, sure. So we signed a confidentiality agreement. And here's the thing I really want to point out for the investment community. That conversation is extraordinarily technical. That's a techie to a techie, right? It's not me. It's our technologists.
And it ain't me either, Dennis. I'll be honest with you.
It's pretty techy. Yeah. But when you're done, the gatekeeper, if you will, for the client, that trusted engineering services consultant, helps the client make a decision. And they're looking for a cost-effective solution that everybody can rely on, right? So the way the technology gets to a customer is just that way. An engineer reaches out to an engineer, has a conversation, they run the math, they run the economics, they recommend to a client, and then you're in. So that's what's happening already. It's very exciting. I mean, we've been innovating for over a decade, and sometimes it's really hard to push it into the market. In this case, we're getting pulled as fast as we can scramble to deliver.
Just before I forget this question,
sure.
Out of personal curiosity and concern for my own health and safety, where would I find the cleanest water right now? do you get asked that a lot?
Yeah, it's a good question. Yeah. So here's the deal. Most water that's being sold or delivered is PFAS free, because the government started notifying everyone that they needed to start testing. And by the way, in California, if they test above national detection limits, they shut off the well. It turns off. And so just think about that. That means they have to purchase water, which means they're probably in Southern California, they're buying it from Northern California. So the cost of water goes up. And that therein lies the incentive. Number one, they can't sell PFAS laden water. Just think about the politics of that. If you're on a water board and somebody says, well, I only have a little PFAS, I don't have much, don't worry about it, right? It's not really going to work well. So politically, they're really taking action very rapidly. And of course, they're good stewards of to their constituents. They need to. So they're looking for solutions that make it cost effective. I had a chance to meet with one of the most innovative water districts.
This is wild.
It's unbelievable.
Right, keep going.
Well, I met with this, let's call it one of the top 10 innovators in the space in the municipal water business, a multi-billion-dollar infrastructure, just incredible. And I asked them, I said, how long is it going to take to get the PFAS out of the well? They said, maybe 30 years. Okay. Now, it took 30 years to get there, so it's probably going to take 30 years to get out.
All right.
Now here's the thing. We've got a project that we were brought in on by an engineering firm. So this is how it's going, right? It's really, and I love it because our phone rings, we don't have to call. So we get a call. Engineer says, "You got a project, got a client, it's a big problem, under mandate. Can you help us?" Sure. Dig deep, go through the profile, and we scope this project. It's probably a 25-year project. 25-year, okay? And it'll probably push over 100 million. I mean, it's an incredible challenge. So what we'll do in that the way that business unfolds for BioLargo is really awesome, I think, right? First, it starts with feasibility, which feasibility is really a roadmap. Present a roadmap to the client. Here's how we start. Here's how we end. Here's what it looks like. Here's what the economics are going to be. Here's what the CapEx is. Here's the OpEx. Here's the maintenance service.
Yeah.
Here's how the installation occurs. Here's how we prove it. Because, it's like saying, hey, let's go build a house. You don't go build a house in a week. You build a house in a year. Well, that's kind of the way it'll go on a project like that. It's so massive that you start with feasibility, then piloting, and you scale up. And then by the time it gets to scale to meet the client's target, you're talking about a project that could be 5-10 million a year for the next 20 years.
I'm going to venture to guess that that is not factored into current valuations.
We don't think so.
Yeah, just a guess. Just a venture to guess there. I do see a couple of questions from the chat. I'm not ignoring you. I will get to that in a second here. I wanted to ask you, if I could, Dennis, for a second about the Garrett Callahan partnership there.
Yeah, so that's first of all, Garrett Callahan is the largest privately held water company in America. Largest privately held. That's awesome. It's like 106-year history or something, right? And so this is another example. And it's so, again, think about us as the technologist, entrepreneur, figuring out how to get all this great stuff to market. It's a real challenge. There's the crossing the chasm, right? The innovation chasm, that cycle of adoption. It's a killer. It is so hard, okay? And what you have to do is have the innovation, start where there's a win. They call it land and expand, all that, right? Strategy. Yeah. And then you have time. It takes a long time. So that's the good news is that time has already been invested. Now we're at the adoption cycle of great innovation. So this is an example where we were contacted by a rep from Garrett Callahan, one of their principals, and they said, "Hey, we've been watching you." I'm thinking, well, somebody's paying attention, right? Okay. They said, "We love your company. Here's who we are." Of course, you look at their profile, it doesn't take long to figure out who they are. This is a substantial company with clients all over the nation, a reputation for exceptional service, a relationship with a customer that allows them to be sticky with a customer for 100 years. Think about that. It's 100 years, right? So they say, "Look, we've got an idea for a gap in the market. If you'll design it and build it and manufacture it, we'll sell it." Okay, so that took me about 3 seconds to say yes, right? Okay, we're in. Okay. Right. So now that's about a year ago. So that product, which will be focused on minimum liquid discharge, we're also working on zero liquid discharge. Zero means all water gets recycled, none goes to waste. Minimum is a very small concentrated waste stream. So we're going to take waste stream water, we're going to recycle it, make it ready for reuse, minimize the discharge, and we're doing that with equipment, right? It's a process system. That product's about to go to market. And so again, think about that. They've got, I don't know, probably 250, 300 sales reps, national footprint. I don't know, I'm guessing 20,000 customers. That's our partner. And we get to focus on the thing that we're the best at, which is to innovate, build, assemble, deliver, spec, all that technical support that makes that work. That product's about to launch. And so again, that's a big, as I say, move the needle opportunity for the company. It's been a year in the making. It's now going to market. We love Garrett Callahan. We're thankful to be in partnership with them, and we expect it to really make a difference in our return for shareholders.
All right, a couple questions from the chat. We're going to go quick here. Steve Luxembourg, is there going to be a residential version for well water? That's a good question, Steve.
Well, that's a really good question. You know, it's certainly possible. Okay, it's funny when we started our innovation in the water field. I have a chance. I'm on a number of industry boards and really active in our community and sustainability, and so we're kind of wired in, and we've got really good talents also wired in. I had a chance to talk to the leader of the water unit at the EPA, and they said, "Okay, Dennis," and they sat me down. Dennis, it's like they grabbed my head and they looked me right in the eye. Whatever you do, do drinking water last.
Great. Why?
Okay?
Why do you say that?
The regulatory threshold is so hard.
Oh, really?
Yeah. And so we've done a lot of regulatory work.
That makes sense. Yeah.
Yeah, we've done a lot of regulatory work at BioLargo, so we are proficient. And we, one of our lines got FDA approval. It took an extra 18 months and 3.8 million to get through a 510K clearance. Okay, we're now in process with EPA on a disinfectant. It's actually very exciting. It's a year and a half in process. I don't know. We probably got another year to go. And so this is very difficult to get through the regulatory scheme. That's why you want to be careful. So what you do is you go where the early adopters are. So who's an early adopter? Industry. They get mandate. They got a problem. They got a budget. It's in the scheme of their budget. It's a small number. They want to fix. They're nimble. They don't answer to a regulated board like a water board, and they go because they got to get a solution. That's where it starts. And then I think it will migrate to drinking water for sure. We will be in the drinking water, and whether it's in a home or not, time will tell.
Okay, a couple more questions here. Quantum, where's Quantum's question? Can BioLargo be adopted to remove other contaminants?
Oh, sure. Well, we have other. So not only does the AEC is a great desal functionality, it also can be modified to focus on very specific contaminants. Mm-hmm. Yeah, so that's either adjusting membranes, flow rates, electric energy. So absolutely, it's got a really efficient, broad range of application. We also have another technology called the AOS, which is focused on destroying micropollutants. It's about 6 years in development. It's in early commercial trials. It's significant. A lot of money's gone into that asset. It will find its way all over the world because it represents the cutting edge of advanced destruction of organic molecules, right? So again, super techy, but the real deal.
All right, last one, Alex B. When do you expect to make a profit?
Oh man, isn't that a gazillion dollar question? Certainly the AEC has the potential to drive massive revenue and profit. So it has the potential. The question is, how much continued R&D will we do to advance technologies and really secure a lead position in the market? I think in the near term, that would be more likely. Continued reinvestment. If you think about, just imagine, we did a few million in revenue last year, okay? As we say, proud but not satisfied. Okay, Yahoo, great. It's like a scratch in the surface of the opportunity. So now we're finding our own. We're being sought out by leaders in industry. We're now being recognized as technically competent and reliable. And so the opportunities are expanding rapidly, okay? There's so much business on our plate. We've got a staff of about 36 people. I can see that tripling in a year. That's going to eat up your profit, okay? But listen, by doing that investment work, we then are poised to be competing in the hundreds of millions of dollars opportunity as opposed to the millions. So I think that's worthy, and reinvestment is wise and required. So, but what we can watch is extraordinarily aggressive revenue acceleration. And of course, we have gross margin. We're not putting these out without a profit, but we're going to take the profits and reinvest in R&D and staff through a hyper growth phase. Then we can level out. And of course, many people believe some of these extraordinary assets we have will be perfect acquisition candidates to be gobbled up by the bigger players. And so we want to work our way up the food chain. As we always say, everything here is for sale, right? That's the name of our game. And we have a whole portfolio of 7 technologies. And in some cases, we're not selling technology, we're selling products. And so that's another way to leverage our technology to create value for our shareholders.
I appreciate that candor. Some people won't even acknowledge that they're for sale or shopping. So I appreciate or shopping themselves. So yeah, I appreciate the candor. Dennis Calvert, again, BioLargo, he's the CEO there. Dennis, thanks for coming on today. You win the day for prettiest background. So thanks for that. And California's hard to beat. And then someone in the chat says, come to do Michigan next. Seeing as how I'm in Michigan, I endorse that. So Dennis, have a great rest of your day. Good luck, and have a great rest of the week.
Spencer, thanks. Take care.
All right. All righty. Just like I did for Dennis, I will do for our next guest, and I will ask him a basic question because I never want to assume that you all know what certain words mean. But Mike Ferguson is our final guest of the day. He's the president and CEO of Gensource Potash. Gensource Potash. I'm going to bring him on and ask him what the heck is potash. I don't assume you know anything. So, Mike Ferguson, there he is.
Hi, Spencer.
How are we doing today?
Very well, thanks. You?
I'm doing fantastic. It's Friday. We have a nice long weekend ahead of us. So I'm feeling good. But again, potash, what is it for the uninitiated?
For the uninitiated, potash is fertilizer. It's potassium fertilizer. Chemical symbol K. It is the 3rd number in the bag of fertilizer that you buy at the store. Those 3 numbers that are on your bag of fertilizer represent N, nitrogen, P, phosphorus, and K, potassium. Potash is potassium.
Okay. And again, I don't feel bad asking a question like that because I don't want, if you're in the chat and you're like, what the heck is potash? I don't want you to feel like we know something you don't know. You can ask whatever you want in chat. There is no question too dumb. That being said, let's keep it going here. So potash is fertilizer, right? I mean, tell us about the business.
So the potash industry is a large one and a global one. There are this year it probably looks like in the high 60s, call it 66, 68 million tons per year of potash fertilizer produced and consumed around the world. It's consumed through direct application to various crops, corn, soybean, sugarcane, etc. Or it's mixed with other fertilizers, and you come up with the 3 numbers N, P, and K that I mentioned on a mixed fertilizer bag. It's produced mostly in Canada and the former Soviet Union, Russia and Belarus, and it's distributed around the world from there. It's a fairly quiet. It's not surprising that people wouldn't know about the potash industry because it's a bit esoteric. It's very quiet and it's quite opaque. It's not something you hear about every day, and it's not an openly traded sort of commodity. The production is concentrated in the hands of mostly 5 players around the world in Canada and the former Soviet Union. Those 5 players control 75-80% of the market globally, and they control it pretty tightly and stay pretty quiet about it. So it's not a public facing commodity, but it's a critical mineral, and it has been defined as a critical mineral in the United States and in Canada also. And it's important for our future food security. You know, as population continues to grow, depending on who you believe, we're going to be 9 or 10 billion people by the middle of the century here. Arable land continues to disappear through urbanization and climate change. And on top of that, people's diets are improving, moving up the food chain, so to speak, more protein. And all of those things put additional pressure on agriculture to feed us all.
All right. So without like trying to fear monger here, I mean, how big a problem is this? I mean, the world needs more potash, but I mean, how much more? And yeah,
it's the world. There's a steady increase. Potash has shown a 2 to 3% combined average growth rate over decades. It jumps up and down like anything else, but on a straight line basis, 2 to 3% per year. So there's at 65 million tons. That tells you need at least a couple million tons each year, additional capacity as you go forward. So so far that capacity has been provided by the existing players. It's been very difficult to break into the market because breaking into the market requires enormous capital expenditures to create a mining operation that creates enormous tonnage. And once you have that enormous tonnage, of course, you've got to go sell it. And when you sell large tonnages of things, you're forced into a global marketing situation, and that makes you get into the transportation and the port facility business as well. So it breaking in is an expensive, time-consuming, and very complex manner. So the production's been provided by the existing industry up to now.
So what is Gensource doing about that?
So Gensource is a very experienced team in this world. The project team that's with us here in Gensource is the same project team that was with another small company called Potash One 10, 12 years ago now. We developed an old style solution mine in Saskatchewan and sold that to K+S, the large German fertilizer manufacturer. They went on to construct it. It's now called the Bethune mine. It's the newest potash mine in the world. It's up and running. But in that exercise, we started to understand that it's not a sustainable model. It's not sustainable from a capital efficiency perspective, and it's not sustainable from an environmental perspective. You may or may not know that most potash mines in the world mine an ore that contains 2 parts of table salt, NaCl, sodium chloride, for each 1 part of potash. So when you mine that stuff, you end up creating, for each ton of potash you produce 2 tons of excess salt. And in most places, Saskatchewan particularly, and the former Soviet Union as well, there's no commercial market for that excess salt, and it sits on surface. So in Saskatchewan alone, since we've started mining potash here in the late 1950s, we have placed over 1 billion tons of excess salt on surface, and it sits there. And it's an environmental hazard. It's a decommissioning problem. And so Gensource is here to bring a new model to the industry. We're here to provide more of a manufacturing model to the industry rather than a bulk tonnage mining model. We have developed a project that is relatively small, but modular and scalable, highly efficient, and environmentally sustainable. So these are words that you're not actually allowed to say with the word potash right now as the industry stands right now.
Can you explain exactly how each of those words are applicable, right? Modular, environmentally friendly.
Absolutely.
Yeah. Saying that they are is one thing, but can you explain that?
You bet, yeah. So Gensource has taken the approach of creating what we call them a module. So our modules are a production capacity of 250,000 tons. So that's 1/10 the size of a typical potash project out there. You can add multiple modules together to make it larger. There's no question with that. But what we wanted to do is to increase the efficiency, to allow us to scale it down to this size. So it's important to get it to this size because that amount of potash, the 250,000 tons, is relatively easily marketed into niche market areas. You don't have to be global to market 250,000 tons. So our overall business plan is to be small and scalable and environmentally sustainable and vertically integrated with our market. So our projects are modular. They use a selective solution mining approach that leaves all that excess salt down in the ore zone. If you don't bring it up, you don't have to deal with it. So it's through this selective mining approach, we drill into the ore zone with typical oil industry drilling techniques, and we extract the KCl, the potash, from the ore zone, bring it to surface, and crystallize it out to a final product. The brine that's used to circulate through the mining area is simply recirculated in a continuous cycle. So it's very water efficient. We use 75% less fresh water per ton than conventional solution mining techniques use. And we produce no salt tailings, none at all, which requires then no brine ponds on the surface. So our environmental footprint is negligible.
Well, yeah, I was going to say, is all of that what makes the carbon footprint negligible, or are there other factors at play? Are we also talking like energy usage, right? I mean,
yeah, energy usage is decreased, so our carbon footprint is lower. But the most significant impact is the environmental impact. The polluting side is eliminated in our methods and our modules.
And just to be clear, the project we're talking about is Tegasky. Did I get that right?
That's right. The first project out is called Tegasky. That's the name of the little village close by. So it's the mine's called Tegasky. Tegasky initially consists of one module, so it will initially produce 250,000 tons. We have a partner in this project named Helm Fertilizers of the U.S. Helm AG is the parent company in Germany. Is a large fertilizer distributor in the United States, and they are two things with us here. They are our off-taker, which means they will purchase 100% of the product from the project site right at the plant gate with their own rail cars, their own rolling stock. They will purchase the product there and take it directly to their existing customer base. So that's the vertical integration side. That's the clearly identified market side. We know where this product is going, and we know that 100% of it is sold before we are putting a shovel in the ground. And that's important in the potash industry. The second role Helm is playing is that they are an actual equity investor. They've committed a $50 million check to be part of this project.
And is the project actually online? And actually, on that note, what online projects do you have now?
So the Tegasky is the first project out, and it's getting right to the end of its financing phase. We have the debt portion of financing committed by our lead senior lenders, KfW, IPEX Bank in Germany, and SocGen out of France. They've committed a $280 million debt facility. We have the Helm equity, and Gensource is assembling currently the final Gensource equity that will launch Tegasky into construction later this year. So that's the first project. The path forward for Gensource is, of course, to add a module for the Tegasky project. That's easily done, and it's designed to be modular. So we simply add a module to double production there. But perhaps more importantly, up front here is several other projects. These projects are small enough that our larger business plan has us operating several of these in our lease area. We have a very large lease area in Saskatchewan and excellent resources. So we simply will plan to replicate this business model with something 5 miles down the road, using the same infrastructure and the same techniques.
Mike, as we established before, I mean, potash is just not really a mainstream commodity in any way, shape, or form. So can you just give us what exactly is happening in the potash market right now? We've already established that there's a global need for more, but in terms of just the market dynamics at play, I have limited visibility into what, the ups and downs of that. So like what's going on there right now? Like as far as pricing.
It's an interesting place right now. In the last year, potash prices have shot up, as have all fertilizer prices. That's a function of demand returning post-pandemic and the lack of supply together. So we've had on the supply side, we've had Mosaic shut down 2 of their mines in Saskatchewan due to flooding. K1 and K2 were shut down in the spring of 2021. So that took a lot of production off the market. And we have political unrest with and sanctions, associated sanctions with Belarus. Belarus is a large potash producer, and the latest rounds of sanctions have put a lot of doubt into the supply chain from Belarus for potash. So those things together, the demand and the supply side problems, have created a situation where potash price has well more than doubled in the last 8 or 10 months. Wow. So it's a significant problem. At the same time, grower commodity prices are strong, so fertilizers remain affordable. But nonetheless, they're getting quite expensive for the grower. And obviously concerned. Farmers are businessmen too.
And what is like the industry outlook on that? You frequently hear people whenever in the oil market, whenever oil gets above 70, they're saying, "Oh, oil to 100, oil to 200." Right? But like what is the consensus out there as far as like the direction, or not the direction, but like the ceiling of the price of potash?
Yeah. So there's not a lot of communication within the industry because it's so tightly controlled.
Yeah.
It's a pretty quiet industry. There's not a lot of talk about where prices are going. It's not an openly traded product. So it comes down to a lot of opinions, and you'll hear analysts opining this way and that way. The current supply situation would say that potash price will continue to be strong and maybe even continue to increase a little bit. But the fact is that is going to cause some demand deferral, some demand destruction. It just does. Farmers are, as I said before, farmers are businessmen and good businessmen, and they will start to avoid buying it if it remains this expensive. So my own view is that we're probably at the maximum sustainable price for potash in the current commodity pricing scenario, and it'll probably stay strong pricing wise into this coming growing season, simply because of the current supply demand dynamic. But post that, I think we'll see the potash price settle down a little bit, which is good for everybody.
And then last thing for you, Mike, as far as Gensource is concerned, what is next?
What is next? The next thing you should be hearing from us is the completion of the financing for Tegasky that will launch it into construction, as I mentioned, this summer. It's about a little less than 2-year construction program, and that gives us first product in early 2024. At the same time, we continue to work on, as I mentioned, Project 2 and Project 3, and those will hopefully be some items of news coming up this year as well.
Mike Ferguson, it's been a pleasure to talk to you. He's the president and CEO of Gensource Potash, and I think we all learned a lot about potash and the potash market, and just one more thing for me to think about when I'm laying in bed at night. So appreciate it.
It's a good thing to think about. Food security.
You're right, but it's also big problems, and big problems are scare me. But Mike, a pleasure. Have a great rest of your day. Have a great week, and we'll be following the company. We'll be following the progress here.
You bet.
All right. Oh, sorry to cut you off there at the end. All right, it is 11:40. Here's what's going on. We gotta hop off here. We gotta start Benzinga Live. The question, I suppose, on Benzinga Live is the Cybertruck ever going to come out? I don't know. Real fast before I go, just some housekeeping items. What are we at? Where are we at on likes? Are we doing okay on likes? Can we get some more likes? You guys know that I live off the like, right? That's how I get my energy. That's my potash, right? That's my fertilizer. energy, the likes. I need likes to grow. We're only at 116. Can we get to 150? That would be awesome. Second thing is today's show, the All Access show we do is sponsored by Ticker. Ticker is connecting shareholders to consumers and vice versa, and consumers to companies, and they're trying to give you rewards for owning stock. If you own stock in a company, you should be eligible for rewards, perks from that company. That's the idea here. Let's play a quick video that explains it a little bit better than me.
What is Ticker? That's right, Ticker with 2 I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Get rewards for owning a stock. Click on the link that's pinned to the top of the chat. I'll put it on the screen as well. It's ticker.com/Benzinga. There's 2 I's in Ticker. If you go to that link and you click on the box that says Benzinga All Access Listener, and you open an account and you connect your brokerage, they will send you a $20 Amazon gift card. That's all you got to do. Ticker.com/Benzinga. Check it out. A massive thank you to all the companies on the show today. Gensource, Potash, BioLargo, Safe Foods, Creek Road Miners, Scisparc. Thanks to all the executives from those companies. I appreciate their time. They're very busy people, and they come hang out with me, so it's always fun. Thanks to all of you in the chat. We're going to hop off here, and we're going to go to Benzinga Live. I'll see y'all over there. I think I hear Aaron Bree live. I hear him going right now. He'll be joined by Luke Jacoby. I'll be on, several guests. Oh, you want to hear about what's coming on the next show? We, and by we I mean producer Rohan, got the chance to drive in a Rivian. He's going to talk about that, and at some point during the show, I don't know when. So stay tuned for Benzinga Live. I'm going to hop off. Everyone, good luck in the markets. I know it's a struggle sometimes, but how we doing here? Yeah, we're mixed out there, right? It's just one of those days. Hopefully it's Friday, so hopefully we end up end the week on a good note. But I'll catch you guys over on Benzinga Live. Thank you for watching All Access. Hit the like button, please, and that's a wrap.